Thank you so much. Today we've obviously got Sundeep and Richard from Together joining us on this interview, which we're running on Bridging Commercial. So thanks very much for your time today, and to give our broker readers a bit more insight into how Together is moving in the specialist lending market going forward, which I'm sure a lot of our readers will be keen to know about. So, you know, since March, since Together announced it had temporarily halted new loan applications across its product range, what key changes and steps have been made at the lender during this time to prepare itself for new lending and to shape its business for the future?
Do you want me to kick off on that one, Sundeep?
Yes, please do.
March seems like a long time ago now, doesn't it? Really, but yeah, back in March when it all started to happen, the first thing for us obviously was to get used to how we would need to work from a colleague point of view and from a back book point of view. Because as a lender with a £4.5 billion back book, over 50,000 customers, one of our main concerns was how we could help those customers through the times that we thought were coming, and certainly they came and affected how things were going to work. But first of all, of course, we had to get over 700 colleagues working from home, and we've talked about Wi-Fi and technological stuff this morning or this afternoon. So we know how interesting that can be. But that was something that we got to grips with fairly quickly, as I'm sure, like a lot of other businesses and lenders. But we very quickly came to 4 key things that we needed to really concentrate and focus our minds and our work on, and that was to make sure we protected the back book and the back book customers. That was priority number 1, really. To make sure that obviously our regulatory obligations were undertaken and were looked after as we should. To make sure that we spent this time as well looking at automation, like a lot of lenders. A lot of the systems and processes that we had, and to a certain extent still have as we move along, weren't perhaps as slick as we would want them to be as lenders grow up. So we knew that this would give us some time to really get our teeth into how that can be better moving forward, and also to look at funding and protect funding, because in a market that potentially was going to get interesting from a funding point of view, and obviously from a market that was going to change from a risk profile and the type of lending that you were going to do, we wanted to very quickly get to grips with that, and that certainly sort of took up our first few weeks of the period.
What were you both personally tasked with during this time, and have your roles and responsibilities changed as a result of the COVID-19 crisis?
So one of the key things as a sales team we were tasked to do, and we did and we continue to do, is to make sure that our key partners in our distribution channels were updated regularly. And for us that was important because, like most businesses in the country, everyone has experienced different variances almost weekly, so it was important to have touch points with key partners. So that was the key thing. One of our key things was communications. We also had to make sure that we could meet our regulatory obligations. You know, we have quite a big personal finance back book, you know, as well as a pipeline, so we had to make sure we were treating those customers accordingly, with almost a COVID lens, as the times were changing almost weekly. But that was one of the things we had to do. We had to manage those expectations within the market while we all adjusted to the changes or that lockdown brought around.
I think the other big thing was colleagues. Obviously, you've now got 700 colleagues that used to be in an office working from home. You know, people work from all sorts of homes, don't they? So making sure you keep in touch with those. A number were working from home, a number were furloughed, as would have been other organisations as well. So making sure there was a keeping in touch feel about the whole thing, so people weren't just left to their own devices. As Sundeep rightly says as well, it was a time when the government would consistently bring out new measures, you know, whether it was furlough schemes, whether it was payment holidays, whether it was C-bills or attitudes to commercial businesses. We needed to make sure, A, we were aware of those, but B, we helped our broker partners and the other departments that sit within us as a lender manage those situations. It was funny, we were talking earlier on that back in 2008 and 9, we would have been a very different sized company. So being more agile is a lot easier than trying to do that with a £4.5 billion back book and 50,000 customers. So making sure that you move the tanker, if you like, in the right way and appropriately, both for the environment, but also for future market and protecting the business so we can be out there again doing what we need to do was a real focus.
Definitely. And then obviously since then, back in July, which wasn't actually that long ago at all, but Together confirmed it had been cautiously lending throughout, kind of behind the scenes. And although it was unlikely to resume its pre-COVID-19 activity levels for some time, I think that's what was quoted in that report in July. Has that thought process changed at all? And have you been cautiously lending across all products or just a few of them?
So we continued to fund throughout lockdown, but it was with a restricted budget. And that's because while we had to restructure our business and take the necessary group exec decisions that were made at the beginning of lockdown to change the way our business operates, to maintain a sustainable and a responsible business, we were restricted with the budgets we had. To put that in context, pre-COVID, we funded approximately around 200 million a month. And last month, that was reduced down to just under 50 million. So you can see the impact it's had on why, as a business of our size, we've had to take some, hard decisions, but decisions that were necessary to sustain the business model we want for the future. And so, for the short term, we will focus on unregulated lending. That's been a core focus for us. But our budgets are growing month on month, and that's across reg and unreg. But we just have to be careful and cautious how we return to a distribution model that was pre-COVID.
Sure. With the under £50 million a month, was that how much was going towards specialist lending? So, for example, bridging.
From a specialist lending point of view, that was 45 million.
Okay, so it was the majority of that.
Yeah, and then you could split it further, but predominantly our business is focused around bridging.
And a lot of the lending during lockdown was necessitated by back books, so loans to the existing clients, and also, of course, our regulatory obligations. So there was stuff in the pipeline that we needed to fund because it was at a stage where it had to be funded. So that's what dictated a lot of that. I think going forward, as Sundeep rightly says, firstly, there's making sure that our funding is secured, so making sure we've got budgets to be able to move forward. But secondly, all the things that the market has been showing us over the last few months now needs to be part of how we operate a risk-based lending approach. So making sure that we understand where the market is, we understand what valuations are doing, and we understand what personal circumstances are likely to be changing during what is a volatile market. And the one thing for sure, what we think today might be different in a month's time. So making sure that we keep up to date on that's paramount, really.
Definitely. We're aware that you are providing bridging finance through an exclusive number of brokers at the moment. When did this start? And was this from July? And will you be opening this up to the wider broker market soon?
So we've been lending throughout lockdown, as mentioned before. I think from a bridging perspective, we've got to be careful, as mentioned. Our funding's got to be controlled, but it's allowing us to deal with a limited distribution, which allows us to test and implement our automation, innovation tasks that we have, which are gradually being dropped into our process. To give you an idea, we've probably completed about 12 months work of innovation and automation within the last 5 months. So behind the scenes, we've been very busy making our business more efficient, to cope with almost a return to high levels of lending. But we're doing this gradually because we understand, we want to get bits right first, not throw it all in one go. The feedback we're getting from our partners is crucial. So, for example, it's not just sales and products that are responding to feedback. We've got credit, risk, operations, all now involved in the broker feedback, which is hopefully making our journey in terms of transacting with us a lot more slicker. And as our process gets slicker and our budgets open up more, yes, the distribution will widen, but we'll control it to an extent to make sure that we come back. That is a prudent way of returning.
Mm.
And we would say, wouldn't we? But I think it makes sense. We're managing future money. So we're managing a tranche of money that we're hoping will widen out and get bigger. But while we're managing that, to go out to a limited and controlled distribution of brokers and packages that have always been closer to us, that understand how we work and how we underwrite. Therefore, the way the cases come into us are more likely to be hitting the spot from a service point of view. Because as I've seen in the press and social media with other lenders, service is the things that struggles if you see a spike in business. So we don't want that to happen. And as Sundeep rightly says, we're not going to come out with oh, we've done this transformation, there you go, that's what you're getting. We want to work with our closest partners to understand what it is they need and what's going to hit the spot with their clients as technology moves on. The way you prove income, affordability, valuation, etc., is slicker than it would have been a couple of years ago, and is going to get slicker still. So we want to move with that as well.
With this further digitalization and enhanced automation that you're accelerating within your transformation programs, how else will this help specialist finance brokers? I know you kind of touched upon it here that you've done 12 months of business in, what would you say, five months?
So ultimately, everything we're doing is to make sure that the business we're getting funds quicker. That's our aim. We want to make the process easier for people to transact with us. A good example of something we've launched, which is mainly internally, is e-files. So we now have all our files electronic in the office. Those e-files are accessible via the MBV platform for brokers, which means it's easier for us to receive documents as well as communicate with brokers. But ultimately, it should lead to a quicker funding time. We're trialing various other things that are, other lenders have already done this. So being brutally honest, I think we're playing a bit of catch up, but we've now had the opportunity to do this. AVMs, for example, we've seen what the market's done with AVMs and stuff. We've done our own research, and now we're going through a process where actually we think we're working to get an AVM model, which would be very useful for not just us, but also for our partners. So these are things that ultimately will lead to a swifter funding process. It's some way to go, but we now know we're on the right journey with this, and the business from exec level backs this. They see it as paramount to our future.
And it's no one would have chosen the last few months, but trying to make those changes while you're running full pelt at doing your lending is much more difficult than having the enforced breather, I suppose, that we've had to have over the last few months. So I think that's given us the chance to do it. There are some things that are no-brainers, but there are some things that we want to, as I said, work closely with our business partners and the wider market to say, look, if we do this, does this make a difference? And it's not just about, does it make a difference to us, but does it make a difference to them and their clients? Because if it doesn't, then being mercenary, we're not as competitive as we need to be going forward. So we've got to do these things.
Going back to the to the bridging side, when you're obviously talking about the distribution at the moment, and while you are still going through a limited distribution for your bridging offering, what does your bridging product, what do your bridging products look like compared to what you were providing pre-COVID?
So bridging for us is a guide first and foremost. So while we have products, we treat bridging as a guide. We understand it involves human interaction. There's flexibility in a lot of bridging transactions. So therefore, the actual dealing with us with bridging, the process, the people should be the same. The actual products, they're not too dissimilar to pre-COVID. The rates might be a little bit higher, but then I think most of the market has reacted accordingly. And for us, bridging still remains about certainty of funding and speed. And we will continue to look to offer that and enhance that as long as we have that interaction with our marketplace.
And again, it's a reason for us to keep that limited distribution at the outset, because that certainty of funding, but also the certainty of exit. I think these are the guys that understand that market best as far as we're concerned and understand us. So giving the right journey to a customer rather than send them into a lender that's going to have a problem as they service the loan, it wouldn't be right at the moment for us.
What plans does Together have to rebuild market share and develop specialist lending products in order to remain competitive after the brief hiatus? I know the figures you mentioned earlier, you know, pre-COVID, you were lending 200 million a month, and then last month it was just under 50 million pounds. I mean, that's still a pretty large figure, even though it is a reduction on pre-COVID. That's still pretty big. About the bridging market, for example. I know this is specialist lending in general.
Yeah, and the plans are, you know, as I said, we're only just off the stocks, if you like, with the limited distribution. But the plans will be to see how that goes over the next short period, see how our funding goes, but also see how the market goes. And we all know that what we're seeing, I think, market-wise, is when there's adversity at some points, there becomes opportunity as well. And certainly the auction sales are really busy at the moment. I think people have sat at home for the last few months thinking they must get out of here. So the purchase market again has been quite busy. But is that a bubble or is that sustainable? And I think what we want to do and what we must do as a lender is not only grow market share, but grow it sensibly and make sure it's sustainable from a corporate point of view, but also sustainable from a relationship point of view. Our view would be, with a following wind and no hurdles in the way, that if this is successful, as our funding lines get stronger, we would widen that distribution. But there's a long way between now and getting there, and we'll do it sensibly and appropriately.
Do you have a proposed time frame for that, or is it kind of you're just seeing how it goes?
Yes. So I could make up a time frame for you, but I can tell you what it'll be wrong. So what it'll be is we've got ideas of what we need to do to trigger widening that out and what needs to be true, if you like, for that to happen. So certainly we wouldn't be doing our job strategically unless we had a view of what the next period is going to look like. But I've been around a few years, and I've never worked in a market that's as volatile as this and could potentially change as quickly as this. So it will be done on a series of decisions. I think for the next few weeks we've got what we've got, and let's see how that sits and see how that works. And if we can widen that out from a funding, from a market, from a partnership point of view, we'll be doing that as early as we can, because that's what we're in the game for.
Just to add to product-wise on that, we are listening to feedback on products. So we know with the stamp duty changes recently, it's not only driving bridging, but buy-to-let, for example. We know in the regulated space that the second charge market probably needs a bit of more support. So we're understanding the feedback. So we want to make sure when we do come back, it's meeting the consumer needs as well.
What key challenges do you expect the specialist finance market will face for the rest of this year and into next year?
I think it's twofold really. There are challenges and opportunities. I think if I'm looking at the market at the moment, I'm looking at people that have been on furlough, self-employed applicants that have maybe not had a consistent income view during this period, people that might have had payment holidays. It's speaking more about specialist lending than it is high street lending. So I think that opportunity is going to be bigger. But if you're a lender and you're sitting there wondering whether you can take advantage, if you like, of that opportunity, you've got to look at where the property market's going from a price point of view, where people's incomes and jobs are going as well. Are they migrating out of cities? Are they changing from a profile point of view? Are more people going onto a contract or whatever? And certainly from a bridging point of view, you've got to make sure the property market's there for exit, because sale of property is still the biggest view of an exit. So if with those opportunities, I think if you're a specialist lender, you'll be thinking, here we go, there's going to be a bigger market for us. But whether you can actually capitalize on those opportunities very much depend on how that market settles down.
Back in July, sadly, it was announced that Together had announced a consultation process on proposals to reduce jobs by around 200. Has that consultation process ended now? And if it has, what was the final outcome? And how has this impacted the specialist lending team specifically?
It's a difficult one. It's virtually ended now. So these things had a little knock on life, I suppose, but it is all but there. Together's always, I've been there 3.5 years, but it's always felt to me, and I know it has for people that have been there longer, like a family company. So I think that sort of doing what we had to do to right size, right shape, and right structure the company based on where we are now and where the market is was hard. And as you would expect, most of that impact was felt in the sales, the service, and the marketing part of the company, because they were the teams that had grown to do the level of lending we were looking at before. So we're a smaller, slicker, sharper company with a view now to growing again, rather than keeping the structure we had, even though the market doesn't support it. So it has been hard, but we've spent the last period being as sympathetic, as appropriate, as supportive as we could be to colleagues that were going through difficult times. We're not the only ones that are in there. That doesn't make us feel any better, but it was something that we had to do.
Yeah, I think one thing to add is, we've always had a highly skilled sales team as well as underwriters, and we've tried to retain as much expertise as we can. So that core benefit that the market's used to dealing with together, is our people, and we've tried to make sure that we maintain that to an extent. So therefore, the product range we offer is specialist, but we make sure that the right people are there to meet our market needs. And it's not been easy, but we've tried our best to maintain that.
That's good. And what's your what is Together's outlook for the bridging market? I know we brushed on it a bit earlier, but what is Together's outlook for the bridging market specifically going forward? Are you optimistic? Are you going to remain cautious? So what's your kind of personal views, and also Together's views as a whole?
So I think as a company, we're cautious. Q1, Q2 next year, I think we have to, as a company, we think we should be cautious, prudent. But we do see opportunity. We do see, the stamp duty we've mentioned before has driven quite a lot of inquiries. We're getting a lot of noise from the market of customer clients and what they need. The auction markets, we have an auction team. Those guys are busy as well. So we can see, some good opportunity here. I think based on the situation we're in, which is quite unique, you just cannot put your finger on exactly if that's going to materialise going forward, hence why we're stressing the caution. But we do feel that if we can come out of this by Q2 and there's no major wobbles, then why not be opportunist for the bridging market? I think there is good opportunity there. Again, I still think that there's a lot of education needed in the market in general to help with bridging. I know lots of people over the last few years have tried hard, but I still feel that we've done a lot with clubs and networks, for example, in the past, where we've helped bring that understanding of where bridging is appropriate and where it's useful. Same with seconds as well. So yes, I don't see, if we can get through Q1, Q2 next year, then every reason to be optimistic.
It's interesting because although we've got products across the board and we always have had, I think bridging would be our specialist subject, and that's really the core of what Together has always been. And as Sundeep says, really keen to share that knowledge, help the market going forward as well, if we're able to do that, certainly via the clubs and networks, but also via the packaging community as well. Property is still a great investment. If you're looking at where you're putting your money, is it the stock market? Is it who knows what interest rate on investment accounts, or is it property? People are still investing in property. I think the rental market's still strong, and as we've said, the auction market's strong as well. But we've got to be cautious about where that may go over the next few months.
Will your plans at all be halted or delayed at all if we do have a second peak or a second national lockdown? I know that, touch wood, we don't, and that we're hoping that it would be more on a regional basis. But would your plans, what is the kind of backup plan if that does happen?
I think if someone tells you they've got a cast iron backup plan for that, then I'd like to go and sit next to them for a while. I think basically it's not the fact there might be a second lockdown or regional variances or whatever. It's what the effect that has on the market and on jobs and on affordability in general. So as we've said, I think more than ever before, as a responsible lender, we're always reviewing what the market's doing, but more than ever before, because that market can move on a knife edge, and it only needs Boris on the TV at 4 o'clock telling us something's changed for that to change. So we need to keep very close to that.
Yeah, but one thing this has taught us is we've learned some lessons quickly. So in terms of reacting and responding, I think, you know, we like most people, because this is a unique situation, we'll be a lot more prepared to handle if that happens. Fingers crossed it doesn't.
Do you think this kind of eliminates the need for long-term plans? Well, not the need, but do you think more people will be just basing their business plans on a shorter term basis now, because they have to react, like you say, to things which change on a daily, weekly basis?
I think long term is probably shorter. I think people will still have short, medium and long term plans, but I think what they'll do is they'll keep closer to the review. Whereas it used to be, right, we've got the next 6 months and maybe we go hammer and tongs at that. I think there'll be a lot more. Let's have regular checks on where this is going. Let's talk a lot more to not only the industry experts, but also to valuers and solicitors and packagers and brokers. So we get that feel for where the market's going even more than we did before. So we've always had a finger on the pulse, but I think that needs to be checked more regularly.
Is there anything that you would like to add or say to our broker readers at all, which we haven't already covered?
From my point of view, just how important they are to us. We're an intermediary lender. We've got a small direct arm, but we're an intermediary lender. Sundeep and I earn our money and wake up every morning thinking about our intermediary partners, because that's what we do for a living. So they are important to us. If that hasn't felt like that over the last few months, from a lender broker point of view, not just from a Together point of view, you know, apologies, but we've done what we had to do, and now we're very keen on making sure that we're close to our partnerships going forward, so we can grow again with them.
Yeah, fully support that. You know, we are predominantly an intermediary-based lender. We are now coming out of, you know, the various things we've done internally, as well as, you know, changes to the COVID, how you can operate and stuff. And actually, we're keen to start interactions. Yes, we'll do it controlled, but guess what? We'll make sure that we'll do this so the quality is correct, and actually the solutions that we provide for the customer at the end of the day are the right solutions. So for us, feedback is almost, it's always been important, but it's crucial now for us, because we're at the stage now where we can take that on board with the automation innovation we put in place and actually start making it happen quicker.
And if there are brokers out there that haven't thought of or haven't got a route to specialist lending, I think the opportunities are going to be there for brokers over the next period. Once we've got through this next phase, I think the specialist market's going to be buoyant for them. So if they haven't thought specialists, then probably now's the time.
Amazing. Thank you so much, Sundeep and Richard, for your time, and also for just being so honest and transparent about you know, your plans going forward with Together and the specialist lending market. And I'm sure our readers will be really excited for you and just interested to know what you have next. So thank you so much for your time.